G'day everyone and welcome back to this Share Cafe Hidden Gems webinar. Thanks for your time. We appreciate your time on a Friday lunchtime. Now today we'll be discussing anything from communication technologies to platinum, vanadium and supply chain management. Three-quarters of these companies haven't been listed on the ASX for 12 months, so they're new to the market and you're hearing their stories for the first time. Okay, first up we have TNG Limited, ASX code TNG, market cap of around 131 million. Our research business, Corporate Connect, has just published a report on the company, just for full disclosure. So if you want to have more in-depth knowledge of the company, look out for that research, which is on Share Cafe. The company has a one-year return of -8%. Stock's been up very strongly the last couple of days. Now, the company is an Australian resource and mineral processing technology company, progressing towards the development of its 100% owned world-class Mount Peak vanadium, titanium iron project, beg your pardon, in the NT. We have with us Jonathan Fisher, who's the CFO. Jono, over to you. Thank you.
Thanks, Tim. Great to be here again. I think it's been 6 months, almost to the day, actually, since I last spoke to the Share Cafe platform. And very shortly thereafter, the company got thrown a bit of a curveball. We went into a bit of a huddle, doing a lot of work with our consultants and actually with the government and the EPA. I'm very pleased to say that we've emerged from that. We've got a stronger project, a more financeable project. And I'm here to talk to you today about our final pathway through approvals and into construction. So let's flip over. Yeah, next one. That's good. So exec sum. I'm actually going to talk through most of these points later on in the presentation. The thing for TNG, we're developing the Mount Peak mine and processing hub. That is basically in the middle of Australia, southern Northern Territory, very close to existing infrastructure. We'll go through these highlights in a second. The thing I'm going to talk to now, so I'll just pick out a few points on each slide, is the bottom one, which is green energy. We've been making a lot of noise around our green hydrogen and green energy strategy. And I've seen on investor forums, and there's been a few questions to say, well, geez, you know, don't quite get it. Is it a distraction? The company should be focusing on development of Mount Peak. And what I want to sort of highlight and explain it, I guess, in layman's terms is green energy is not a distraction. Green hydrogen is absolutely core to us being able to develop Mount Peak. And let me explain why. So the NT has got its act together and it's actually delivered a net zero by 2050 target. Could even come in before that. Obviously, the feds may do something similar, we expect soon. And so when we look at our project, we will be in operation still by 2050 because we're a multi-generational, really long life asset. And so when the government is looking and saying, hey, are these the guys that we want to develop a project in the territory? They want to go, how will this project affect our target for a net zero by 2050? And so what we're doing through our green hydrogen strategy is demonstrating that we're really thinking about this. There's a lot of strategy behind it, and we are absolutely the type of people that you want to develop a project in the territory. So I guess in the short term, green energy and green hydrogen for us, it really de-risks the final approvals pathway. Step forward again and then go, okay, well in the medium term, green energy and green hydrogen and ESG credentials, they're extremely important for financing a project these days. When you look at the government concessional lenders, so NAIF, CEFC, EFA, very, very important to have those credentials. One step further, commercial banks. Well, there's an absolute truckload of money available in green loans these days. They're buckets of money that you don't want to avoid, let me tell you. Again, when we step into equity and you look at ethical investment funds and sort of impact investing, the focus of the footprint, the carbon footprint on the projects is extremely important. And even when we're now getting down into retail, we can't avoid addressing and being at the forefront of green energy. So hopefully that's a bit of an explanation about why you've seen a focus on it from the company, and it's certainly not just a distraction. So as we go over the next slide, and we give a bit more information on Mount Peak, the change that we've sort of announced recently is that we've got a consolidated project now where we're doing processing and mining down at Mount Peak. That comes with all sorts of benefits, which I can run through in a second. The project is underwritten by the TNG's Taiwan, which is a patented technology, which I'll explain. We've got all sorts of government approvals, government major project statuses, a lot of support there from the Critical Minerals Facilitation Office and others. And from a mining perspective, look, we're really actually not going to be a mining project. It's such a large, flat, easy to mine at surface ore body that really we see ourselves as a minerals processing company, not a mining company. Let's flip over to the next page then. So we take one ore body, titanomagnetite, we produce 3 products. The key to that is our Taiwan process. The critical thing about the 3 products is they are all produced at quality, which is above benchmark. That's important for 2 reasons. One, you get more money for it. And secondly, it ensures that you can go into the broadest range of end-use markets, particularly important in V, because if you only produce at benchmark V, you can't actually get into the really attractive vanadium electrolyte businesses. Next slide. And this is the crux of our presentation today. On the left is the conventional process you usually use to produce vanadium from a titanomagnetite. That's 80-year-old technology. And what it does is it takes one thing, V, and it throws away the titanium and the iron, which is actually about 80% of the value. Now, it's 80 years old, and look, I should know because I was the one who financed the last V project that got up in Australia using that tech. It's old, it's inefficient. From an automotive perspective, it's your old gas guzzler. Doesn't care about the emissions it puts out and doesn't use its fuel efficiently. On the right is Taiwan, which is our proprietary technology. And to take that analogy further, this is the Tesla of minerals processing. Why do I say that? Well, besides the fact that they're both really coolly branded and both start with T, Taiwan is extremely more environmentally friendly and sustainable. It delivers 100% of the value of the ore as opposed to about 20% from the old tech. It's new technology, and it's where the growth will be in this industry. And I'm very strongly of the view that whilst there are actually still juniors on the ASX trying to get this 80-year-old technology up, I don't think a standalone V project using 80-year-old technology is the way to go. And I don't think another one will get done in Australia. The benefit of having 3 high-quality revenue streams from the 1 tonne of ore is diversification of revenue, so de-risking your financing and your future returns. And secondly, it just passes the pub test, right? You're using all the value of your ore as opposed to only 20% of it. So next slide. We have a robust project. I'm not going to go into numbers. I just want to point out a couple of things. The mine life that we say there, well, initially says 37 years, but that's because there is an ore body that we've got to JORC to find resource on. The useful life of that project and the equipment will be longer. We also have satellite ore bodies that we are looking at. My expectation is that this is a multi-generational asset, and you can certainly extend the life of the minerals processing facility beyond that initial life. Again, with ore feed at 2 million tonnes per annum, that is sort of a stage 1 thing. And these projects are actually quite modular. You could do a 2 or 4 or 6. And that's something that you could look to do as you prove up the operations of that first project, and then they're all very bankable thereafter. The next slide. So what did we do? We optimized. We were initially planning on putting a processing facility in Darwin. We talked a lot with the non-territory government and the EPA. They provided us some fantastic advice, really, really helpful, and actually solved a couple of issues for us. And funnily enough, when solving those issues, we realised that the project's going to be better off down at the mine site. And that is, we solved the water issue and we solved the gas issue. Now, by bringing everything back to the mine site, again, without going into numbers and just keeping it that sort of common sense level, there's going to be some optimizations. Let's run through them. For example, we don't have to build 2 power stations. We just build 1 bigger one. Well, I can guarantee you there's efficiencies in scale there. We don't have to build a rail siding up in Darwin. We don't have to cart ore or concentrate 1,000 kilometres up to only cart the waste 1,000 kilometres down. And most importantly, we're no longer building in a cyclone area. Well, that'll come with sort of the engineering factors on cyclone construction are quite high, so you remove those. And in the long term, you'll actually also have improved availability in operations because you not have to worry about cyclone inclement weather. So we're very, very pleased with all this. And the other last point there, which is really interesting, this is actually de-risking the approvals pathways, because when you look at approvals, the environmental approvals are generally driven by sensitive receptors, whether that sensitive receptor be human concern, animal, plant, mineral, whatever. In Darwin, there are more sensitive receptors in the middle of nowhere. There are less sensitive receptors. It makes the pathway easier. And finally, being down at the mine site, there are actually a lot more opportunities for our Indigenous partners. So we're very pleased with that. On the next slide, when we go to readiness, well, we're in the final sprint now to finalise all the approvals and get into sort of the proper development work. From a regulatory perspective, we are then having to do a bit of extra work down on the mine site. I would note, though, we do have a full environmental approval already at the mine site. It's just now got to incorporate the processing. So we're not starting from zero. And that's similar with our tenure down there. We've got a mine plan. That mine plan already allows processing. From a technical perspective, if anyone knows our site up in Darwin, it was a funny shaped site. It kind of looked like a barbell, big fat thing here, big fat thing here, a little skinny bit in the middle, which meant the plant was a bit of a funny shape. We're now unconstrained down at the site, so you can make a much more linear kind of efficient plant shape, and the engineering is currently happening on that. And from a commercial perspective, well, we've just continued to get tailwinds in terms of the support from the market and government in terms of critical minerals. So the time is right to develop this project. Another change on the next slide that we've announced is a refinement to the development path. And I think this is a case where we get to have our cake and eat it too. So we've worked with SMS for a long time. They are fantastic at what they do. And part of what really bulletproofs our financing is that we're going to have a process guarantee that sits behind it. So that process guarantee will be both product spec and throughput based. So if you have an issue, hey, there's going to be someone that can fix it. And look, recently there's been a few project developers on the ASX where they've had those issues. They didn't have process guarantees. We do. The benefit of having Clough in there is that they're Australian, that are not so worried about trying to get people in through border controls during COVID, and they've got a track record of constructing big projects in Australia in remote areas. So yeah, cake and eat it too. It's a brilliant outcome for us. Finally, on our next steps, we're pushing through some amendments to permitting and approvals, which is good. And we're discussing obviously all these additional opportunities that we have with the Indigenous groups, refinalising all that engineering stuff. All the work we've done before, we can still use, and most of it. We're now just optimising layouts and other things. And project financing pushes forward. And I'd like to just continue to say the support you get from the market around critical minerals, and the federal government has demonstrated that recently with the $2 billion critical minerals loan fund, which has been administered by EFA. What's interesting about that, it's not actually new money that the government has put aside. That money was always there on the national interest account. What the government's saying is, EFA, bugger it, you want to spend that money on critical minerals. And from all the critical minerals projects there are in Australia, we're the most advanced. So, we want to be front of the line for that. Last point, look, we'll skip through the next couple of slides because they're relating to green hydrogen. I made a pretty strong point about that at the start. And if we just go on to slide 16, I think, which is why I invest in TNG. Look, hopefully, yep, that one. Hopefully, I've put forward a case to say this project is going places. It's the right time from a market perspective to do it. And right now, there's a bit of a disconnect between our market cap and the project value. That has come up a little bit in the last couple of days. I think we've been marketing a lot in the last few weeks. The MD, Paul Burton, has been out on small caps, resources rising stars. I believe there was a Eureka report. I'm here today. We're presenting in the Territory next week. We're now out able to tell the story about how good this is. And I think the market's responding. That said, there's still a lot more to go. So we look forward to more support from our shareholders in the future. And Tim, over to you.
Thanks, Jono. So does the integration of the whole project to kind of one site speed up the approvals timetable?
Yeah, look, funnily enough, yeah, it does, because, as I said, it actually simplifies the final approvals. And it also means you're only constructing, funnily enough, it means you're only constructing on one site as opposed to two. So it'll actually speed up approvals. It'll also, funnily enough, speed up the overall construction pathway. So that's a good outcome for us.
And there's been a lot of inflation around commodities like steel and energy and other input costs in terms of your construction costs. Has that made an impact on construction costs?
Yeah, look, we are obviously redoing all those engineering with Clough at the minute. And, there's probably swings and roundabouts on that. What I mentioned earlier is there's a whole lot of efficiencies we're going to get out of putting that down at the site. And obviously, the last time we reported a feasibility was, I think, 2019. So we'll have to see if there's any movement in those costs. But overall, we expect actually to be in a pretty good position.
I mean, there is a question here. Will there be a new feasibility study?
So there's going to be updated numbers, released in due course. Obviously, we need that for financing. Yeah.
Okay, and a few more questions here. What is a realistic timetable for all the approvals, including CLC? Yeah,
so we have to be a bit careful about what we've released to the ASX here. The last thing we released is that the EPA had given us a sort of a within 12-month kind of guideline, and to which we said, yes, we can meet that. So I'll leave it at that, but obviously we'll be firming up all that sort of the Gantt chart through project development, over the next while.
And a date for first production do you have something? Lots of questions here.
Yeah, look, that's interesting. You might see you mentioned that we had a research report done by Corporate Connect that actually I'll plug you. I thought it was fantastic. I thought they did a good job. He's made some assumptions in there. We haven't actually fully put out a new first production date. So as I said, 12 months for the approvals, and within 12 months of the approvals. It's about as specific as we've been, and we will update the market in due course.
Thanks, Jono. That's all we have time for. There's 3 or 4 questions here. If you don't mind having a look at them, you can type an answer in directly if you have time.
Sure.
Thanks for your time. Okay, next up we have Future Metals, ASX code FME, market cap around $71.5 million. The company is an Australian-based exploration company focused on advancing its Panton PGM project in the Eastern Kimberley region of WA. We have with us the non-executive director, Justin Tremain. Justin, over to you. Thank you.
Thanks, Tim, and thanks to Share Cafe for the opportunity to present Future Metals at this forum for the first time. So Future's a pretty new company. We listed on the ASX in July of this year. In fact, we've just had a dual listing on the London market on AIM, actually as of last night. So dual listed as of July on the ASX, and then we commenced drilling in August, and we've been drilling for a couple of months now, had samples in a lab for probably a month, so expect to start reporting news flow in terms of drilling results imminently. So Future is entirely focused on the Panton PGM project in northern Western Australia. We have 100% ownership. If I just flick through a couple of slides and give you a quick overview on the company and the project. So we have 100% ownership of what is actually Australia's highest grade platinum palladium project. It's a substantial resource as well, so it's not just grade, but it's also got size. So it's over 2 million ounces of PGMs plus gold plus nickel at over 5 grams PGMs. So in fact, it's probably one of the highest grade undeveloped PGM deposits in the world. It's quite advanced in terms of drilling, so most of the resources I'll show you sits in the measured and indicated category, so substantial confidence in that resource. But importantly, that resource is completely open, and the drilling that we're doing at the moment is looking to expand the resource, and we see significant scope to expand the resource substantially from that 2 million ounces. The resource starts at surface, so some of it will be open pittable, and then the remainder will be underground, and obviously the grade supports underground operation. There has been a feasibility study completed on this project some time ago, 20 years ago. In fact, there's been no work, no drilling undertaken on this project for 20 years. But importantly, the project sits on granted mining leases. And if I just flick through a couple of slides here, the board and management team, if I just go back, the board and management team, just quickly touching on this, I won't go into too much detail. But obviously a lot of experience on the board in creating shareholder value and developing projects and creating corporate outcomes or actually taking projects into production. But also a lot of PGM experience, and not just that, but also experience with this project in the past. So Alan Mulligan is on our board as a technical director. He's a first-class mining engineer out of South Africa. He actually sat on the board of the company that completed a feasibility study on this project back in the early 2000s, representing Lonmin, where he was working at that stage. And Lonmin invested a substantial amount of money into this project. And Alan has been involved in the development and the management of several similar style PGM projects in South Africa. So a great addition to the board. And then Mick McMullen is an advisor to the company, and Mick ran many successful companies, but most relevant to Future Metals, ran Stillwater Mining, the largest PGM producer outside of South Africa and Russia. Before that was taken over by a South African PGM producer called Simbanye. And he was familiar with the project from his time at Stillwater because he was quite interested in potentially acquiring the project going back a few years. And then our exploration manager actually was the guy that drilled out a majority of the current resource 20 years ago. So a lot of experience, not just in the PGMs, but also with this project. I'll just flick through the next slide then, just quickly. So the company's capitalised at around $65 to $70 million, trading around 20 cents. Well funded. Our cash position at 30 September, just over $8 million. So well funded for the current 10,000 metre drilling program that we're undertaking at the moment. We'll just move on to the next slide. I guess this is what's unique about this project. I mean, PGM projects of this quality are typically located in South Africa or Russia, and that's where 85% of the platinum palladium production currently comes from. So to have a PGM project at sort of 5 grams per tonne sitting in a tier 1 jurisdiction of Western Australia is very unique and very strategic in terms of value. It's ideally located as well in terms of developing a project and infrastructure. In fact, it actually sits on the side about 1 kilometre off the Great Northern Highway, which runs up to the Port of Wyndham, where currently Panoramic is exporting nickel concentrates from. So excellent infrastructure. As I said, feasibility work previously done, which didn't identify any fatal flaws in terms of environmental issues, and gives us a great leg up as we move this project towards development. Just moving on to the next slide then, just touching on the geology. So the mineralisation, as it's currently modelled, is hosted within chromatite reefs that start at surface, reasonably steeply plunging, but then they flatten out as they wrap underneath a syncline layered intrusion structure. And that has, that resource, as I said, is completely open. The resource is currently contained across 4 zones, the A, B, C and D zone, and we're drilling across each of those zones. If I just touch on the resource, I think on the next slide, you can see here, as I said before, over 80% of the metal currently sits in the measured and indicated category, which is obviously a large cost involved in a feasibility study is often drilling out inferred material to measured and indicated. That's already been done here. The resource currently sits within 2 reefs, the top reef and the middle reef. There's in fact a 3rd reef which is not included in this resource, the lower reef. But of those 2 reefs, a substantial amount of the mineralisation and the resources contained in this top reef, which is actually higher grade, and you're looking at about just over 6 grams PGM and gold plus 0.3% nickel, so exceptionally high grade. These 3 reefs are a few metres wide each, and they sit about 15 to 20 metres apart. Now, something that hasn't been considered in the past is mineralisation sitting between these reefs, and there is substantial mineralisation there. It may not be at the same grade, but when you bulk that out, you've got potentially a 50 to 70 metre wide horizon to look at expanding this resource. So something that we're looking at with the current drilling is not only extending this high grade down dip as an high grade underground resource, but also looking at bulking out the top part of this resource at surface to form a large open pitable resource, maybe it's slightly lower grade, but substantially more metal. So that's the current drilling, and we hope to be able to report on that very soon with drilling results. So just flick through the next slide then, just on the metallurgy. So there's been a lot of metallurgical work done on this project. Probably most relevant is met work done by the previous owner of this project, Panoramic Resources, that was looking to develop the project and put the ore through their nickel concentrator just up the road, about 40 kilometres up the road. So they did a lot of flotation test work. And back in 2015, really had a breakthrough with this project and were able to demonstrate producing a very high grade PGM concentrate, exceptionally high grade, over 200 grams per tonne, in fact, 270 grams per tonne PGMs, to a very high recoverable concentrate of over 80% of the PGMs reporting there, and a very low mass pool of about 2%. So that's a significant breakthrough. That's just through conventional crushing, grinding and flotation. And that was done on a bulk sample that was extracted from the deposit through a exploration decline that was put in place. So part of the drilling that we're doing at the moment is looking at repeating this metallurgical test work across the entire resource, and that's in train at the moment. So we expect to look to be able to develop this project as a conventional crush, grind, flotation plant and export a concentrate. I'll just flick through the next slide in terms and start touching on the upside here. So here you can see the reefs outcropping at surface has been mapped in this image here. The red zone is the area that is currently being drilled, and the yellow reef is the area that has not had any drilling. So in fact, about 8 kilometres of the 12 kilometres that has been mapped at surface of mineralised reef is yet to be drilled. So that gives you some idea of the potential to grow what is already a substantial resource. And also this T1 target up to the north there, I'll just quickly touch on, if you look at the image in the right corner of this slide, we have our geochemistry. So that's just anomalous platinum, palladium at surface. And this T1 target actually has a much larger soil anomaly than sits over the current resource. And that is not included in the resource and it's had very limited drilling. And we see real bulk tonnage opportunity at T1 and that T1 target, and we'll be undertaking a bit of drilling on that. Flick through into the next slide. Just also not only bulk tonnage opportunity to grow this resource, but also high graded at depth. And you see here the pinkish red zones, the hotter colours are the high grade zones, and you can see in the central there's a high grade plunging zone that has not been followed up and it's completely open with drilling. So we've actually drilled a couple of holes chasing that high grade plunge to expand the high grade resource at depth. Flick through to the next slide. Now, so just in summary, we have what is Australia's highest grade PGM project with a substantial resource, but we view this resource as being very much an interim resource now, and we look to grow the resource substantially through a number of facets, as I've touched on. We've got a drilling program that's well underway. We've done about 4,000 metres of drilling now since August. And as I said, we've had samples in at the laboratories for probably a month now. Obviously, as everyone's aware, assay turnaround time is quite long at the moment, but we expect to start reporting results imminently there. And this project is unique in that it is a very high-grade PGM deposit sitting in Tier 1 jurisdiction of Western Australia, which we think not only has development opportunities and advantages, but brings significant strategic value to the project and the future metals. So that's it in summary, Tim. So thanks for the opportunity to present today.
Thanks, Justin. Can you just go back a step? PGMs, platinum, palladium, iridium, iridium, ruthenium. Can you give us a bit more colour on what these minerals are actually used for from an industry perspective?
Yeah, well, platinum and palladium are probably the greenest metals you can get, really. I mean, so they are used predominantly in catalytic converters at the moment. And so are critical metals for emission control, which is obviously a very topical issue at the moment. And so vehicle loading of PGMs has increased substantially over the last few years as tighter emission controls have come into place. And that's resulted in significant demand for platinum and palladium. And then, as you're saying, platinum and palladium prices have responded accordingly, and we're sitting at record highs and come off a little bit, but still at very close to all-time highs, and actually sit at about 4 to 5 times the price of when this project was last looked at back in 2003. And so we see a very positive outlook for both platinum and palladium, as there's a growing focus on emission control, and also platinum is going to have a greater use in hydrogen production, both storage and production going forward.
I was going to ask you a question on hydrogen there. One of the questions which kind of rolls into our next question is that it sounds like it's a great resource. Why didn't Panoramic develop the project? Was that because of where the pricing of those commodities were at that time?
I think there's a few aspects to that. Certainly pricing of platinum and palladium at the time, which when they last looked at it, I think were half the current prices. So that's certainly a factor. Secondly, they had some exploration success at their Savannah project and discovered the Savannah North deposit, which they're now developed and are putting that back into production there. So I guess their focus remained on nickel, and they extended their resource. And also they went through a period of rationalising their business and offloaded a number of their non-core, non-nickel projects. And in fact, this project didn't come straight from Panoramic. There was a private investment group that were in the right place at the right time. We were able to secure ownership of the project at a time when Panoramic was needing some cash up front to develop and get back into production at their Savannah operation.
And just one more question, Justin. Apart from drilling, is there any other exploration methods that suggest major extension of the ore body?
Well, the chromatite reefs are, as you see in the bushveld in South Africa, they're very, very consistent and very continuous. And it really is drilling, but the geology that's well understood, really does indicate that these reefs will just continue at depth, as I said, underneath this layered intrusion. So we're very confident it's just a matter of drilling and chasing the mineralisation.
Great, Justin. That's all we have time for. There's one more question there. If you don't mind answering that directly, that'd be appreciated. And have a nice weekend.
No problem. Thanks, Tim.
Next up, we have Felix Group Holdings, ASX code FLX, market cap around $35 million, hasn't been listed for 12 months. The company is an online construction marketplace for people to list, find and hire equipment and subcontractors around Australia on any device, anywhere, anytime. I think you're probably very busy at the moment, Mike. We have with us Mike Davis, the CEO. Over to you, thanks.
Thanks, Tim. Let history record. It's day one of Melbourne out of lockdown. I'm at the Share Cafe for lunch. What a time to be alive. As Tim mentioned, we listed in January of this year, raised $12 million to further accelerate growth of the business and accelerate expansion of our software solution. We play in the construction industry and really connect major contractors with their suppliers and subcontractors who deliver projects. So Felix, speed dating in 10 minutes. Let's get into it. We'll get into slide one. It was a cracker quarter for the company, and really excited to be here today and talk about how incredibly well positioned the company is to continue accelerating growth moving forward. Probably the headline that jumps out is that in Q1 we were able to exceed the total new sales number that we did for the previous full financial year, which was just a great result. And I think with the further sort of growth in our pipeline and advanced stage pipeline, management expects that growth to continue accelerating. So it's been for us a journey of a number of years, investing into the breadth and depth of our enterprise solution, validation from industry and market leaders and tier one contractors, and really getting those tectonic plates into place to really rapidly scale growth. So really exciting time to get out of the blocks Q1 and really demonstrate that top line growth. And when we talk about these contractor customers, these are the major contractors building the sort of the big infrastructure and commercial construction projects in Australia. They're the core of our focus because of the size of these companies, enterprise-wide. Felix rolls out across the entire enterprise. They also, so the revenue potential that provides for us and upside as they expand their use case across their enterprise, really large organisations. And they also mandate the use of Felix to their entire sort of project-based supply chains on each of their projects. So you can see there that the rapid growth that they're driving and scale and engagement of our vendor marketplace through the mandated use by our contractor customers. So we'll talk about both sides of the market that we operate in. We've got the contractors and vendors. See some of the other highlights, not only the number and accelerating uptake of Felix by contractors in Q1, but just leading names and ASX listed names, big players in construction and related industries who we brought on. So it's a real focus on quality and number. Some really exciting things in the works, catalyst quarter for us, and excited. I think that given that we've been so focused on expanding the team since IPO, particularly in our product and software engineering business units, to then get back out to the market now and raise awareness of who we are and what we're doing is really exciting. So we'll go on to the next slide. Just talk a bit about the opportunity and what we're seeing through our lens of the industry and working with all of the major contractors, and what we see globally is really just a perfect storm of critical issues that are driving technology adoption in our space. So construction is obviously massive globally, and it's just rapidly scaling up in terms of infrastructure projects across the globe. And on our home shore, that's evidenced by Australia's historic $110 billion federal land transport infrastructure program. So there's never been more complex and larger numbers of projects coming online, and it's critical for construction organisations who've historically been run off paper-based forms, notepads, spreadsheets, to have adequate technology systems and platforms to underpin that scale as it's rapidly scaling up. The margins out there in construction are razor thin. We see a number of large contractors who are actually bidding on large projects at negative margin and hoping to make that back on their subcontractors during the project. So you sort of overlay that on sort of decades-long declining productivity in construction, and the pressure cooker for efficiency and productivity gains just keeps rising. We're also operating in an environment of just steadily increasing compliance and sustainability obligations, particularly related to third parties, which is the space that we operate in for construction organisations. You might have heard about things such as the Modern Slavery Act. States are bringing in industrial manslaughter laws on large projects. There's the requirements to engage 50% local supply on projects, Indigenous owned contractors. So the cost of compliance and the cost of meeting sustainability targets keeps going up, and against that backdrop and sort of converging factors that we've spoken about, it's really just a perfect storm, not only in construction, but how we're positioned as a platform that connects players in construction. It's a perfect storm, and we've seen that evidence in the Q1 step change in growth, and we continue to see that accelerating. So really exciting time for us. The big complex infographic just shows that the scale that you can see in one project without adequate systems or processes, just the breakdowns and bottlenecks that can occur. So we'll move on and just talk a little bit more about our sort of place in the industry. We've spoken about contractors who are our major customers, our key focus area for growth at the moment, and Felix being the cloud-based platform, software platform that connects these contractors with what we call their vendors. And that can be all of the subcontractors, suppliers, and consultants who come together and work on a project to deliver it profitably and safely. And the unique thing about construction, obviously, compared to other industry supply chains, is they're very project-centric. So they're assembled for a particular project and then disassembled, which means that they're sort of dynamic and fluid and high risk, obviously. So a lot of what Felix is about, and why contractors are sort of flocking to use it, is about supply chain risk management, and ensuring that the weight level to which they understand their third-party vendors, who they have a critical dependence on to deliver the works, is equal to that of their own internal workforce. So we'll move on, and throughout that procurement journey, which is where we operate in the construction project lifecycle, you can just imagine procurements, it can be about raw materials, subcontractors on site, and the bidding processes. There's just an absolute gamut of processes throughout that journey, which have traditionally been manual, like I said, paper-based spreadsheets, everyone working in silos, no transparency. What Felix does is just digitize and streamline that entire journey, so it enables transparency and collaboration across large enterprise organizations, and transparency and real-time accurate data amongst the supply chain and third-party vendors to make informed business decisions. So traditionally in construction, you might know if you've got friends who've worked in it, each project has been their island, and each project director would have a black book in the back pocket of his back pocket of vendors and subbies that he'd use. That's all now being sort of rolled out, centralized across the enterprise, and centralized management of third-party vendors, and the processes by which organizations engage them. Moving on, we spoke about the marketplace that our contractors are building for us, and for those who are a bit more familiar with technology investing would understand the attractiveness of dual-sided marketplaces and the power that they have. And often that's due to what they call network effects in industry. So it's sort of like the old car sales analogy. You could replicate the tech, but what's the point? Because that's where the buyers and sellers go. So we're also, we've got a standalone deep technology solution for our core contractor customer base. And by deep value, I mean, it really gets deeply embedded in their operations, and the revenue becomes incredibly sticky, which is great. But they're doing the heavy lift for us on building out the marketplace on the vendor side. So the email will go out as they implement Felix to all of the suppliers and subbies they've worked with in the past. If you want to continue to do business with us and remain compliant to us as a contractor, you've got to register with Felix, join the marketplace, pre-qualify to our organisation, then you'll continue to receive RFQs and bid events, etc. So without little to no acquisition cost for Felix, they're rapidly growing this scale of the vendor marketplace, which as we shift in strategy over the next 12 to 18 months to look at monetization on the vendor side, is just creating a really significant opportunity on that side of the market as well. So let's look about on the next slide at some of the key names which are helping drive that for us. And for those who are a bit more familiar with the construction industry and related sectors, heavy asset sectors, you'll see that here some of the leading names like Simic Group and all of their operating companies, Australia's largest contractor, Veolia, a huge global waste management company headquartered in France. So Downer, names like that. So I think that one of the key takeaways here is we're really locking up the key nodes in the industries. These are massive organizations, and they've all done significant due diligence and selection periods to land on Felix as, I guess, the go-to platform to manage all of their third-party vendors and data and procurement processes, which are really just mission critical processes across these industries. So that's been a really core part of the strategy, I think, is locking up some early days, some of these key tier one names, and expecting that to continue. And I think that's the benefit for incoming investors now, is that the amount of time and money that's gone into the platform development, but also the early validation of Felix by industry leaders in Australia and real multinational contractors here. Okay, we'll keep speeding through. Conscious of time, Tim's disappeared, so I know I've got to keep ripping through. You see there, $60,000 average annually on the contractor side. That's been largely built off the modules that you see on the right. We keep releasing and developing new modules, so we think we've got a line of sight to getting that over 100,000 in the near future, which is an important part of our strategy. On to the next slide. That's what we call the land and expand strategy. We land an account and we continue to expand. We're deeply embedded in their organisation. They keep expanding their use case and number of modules. There's a case study for you. And on to the next slide. So our near-term focus, you can see there a significant pipeline. COVID impacted last year in FY21, significant pipeline, and a real focus on just doubling our number in the near-term number of contractors, and off to a great start, as you saw in Q1, and expect that to continue growing. Okay, next slide. Spoke about the significant opportunity to monetize the vendor side of the marketplace at scale, and the contractors are driving that opportunity, and there's a real clear path to being able to achieve that. as you can see on the page. And we'll move on to the next slide. There is a significant global opportunity, and we believe Felix is on the path to being a global technology leader and best in class in our space across the globe. Our current focus is on just the amount of pipeline activity that we've got and converting that in ANZ. But you can see, just given the fact that a number of our multinational contractors have international projects or global supply chains, they're already building us out a global vendor marketplace organically at no cost to us, which will give us a real running start as we go to selling directly into those markets. On to the next, and almost home, Tim. Again, just to recap, just this perfect storm of tailwinds that are just driving opportunity for Felix, and a wave of digitisation through construction, and specifically construction organisations addressing vendor management and procurement with a specialised, built-for-purpose platform like Felix. Last slide before I hand back to Tim. I think it's really important to kind of note that just the experience and expertise we've got on our board supporting management, probably headlined by Rob Philpott. For those of you are familiar with Rob, co-founder of Aconex, took them through a 20-year journey onto the ASX and ultimate acquisition for 1.6 billion, I think, by Oracle in 2017. Michael Bushby, chairman, president of Roads Australia, and recently joined by Joycelyn Norton, joining the board to chair the Audit and Risk Committee. So really strong board to round out. Tim, sorry if I went overs. Over to you. Thanks.
No problem, Mike. I know there's a lot to get through. It's a very impressive story, and I suppose it shouldn't be underestimated, the involvement of Rob Philpott there. The business model does remind me of Aconex, and they were sold for 1.6 billion. Can you give us a little bit more colour on Rob's involvement?
Sure, and you're spot on, Tim. I think if you took the fact that Aconex was sort of document management and collaboration, and we're sort of vendor management procurement, the target market, the size of deals, everything is just exactly the same. So Rob tells a great story that Aconex actually stood for Australian Construction Exchange. When they first started out in 1999-2000, procurement was the problem that they were looking to solve. They quickly worked out that they didn't feel like the internet in the dial-up modem days was kind of ready for that, and they switched to documents to get the cash flow happening. So post his Aconex journey, Rob was sort of in discussions for about 6 to 12 months and really did his D&D on the company, but he felt like this was an opportunity to go back and solve the day one Aconex problem they never got to on a global scale, and felt like Felix was the best position to do so. So we're so fortunate to have Rob on the board, and the expertise and the sounding board and guiding light for management. And he's been fantastic for the company.
Yeah, I mean, very important, because you are a platform, and you spoke about that network effect. Is it about growing more users, or is it about selling more services to those users? They
probably all feed into each other. The more services that we sell into customers, the more breadth that it gets across usage within those organisations, the more user accounts that it generates within organisations, and the more customers that we lock up, the more vendors then have to join the platform, and users on the vendors side as well. So all about that, acquiring new customers, expanding accounts of existing customers, and providing tools for vendors and contractors to interact is all just honey to the flywheel effect, really. And that's what we're really starting to see take off now, which is obviously exciting for the company.
I've got a couple more questions here from what I suggest as a shareholder, because he seems to know his stuff. So for this, he congratulates you on an excellent quarter. For the 6 new signings in the past quarter, how many modules did they sign up for?
Good question, and putting me on the spot. Generally, our use case to date has been they'll take vendor management and sourcing on. Traditionally, you would have, for those who followed our announcements, and I encourage you to go back and look, the recent release of our procurement schedule module. So we've had a couple of cases already of customers taking sort of all 3 to come on, and we're incredibly excited about our upcoming contract management release later this month. So probably around the sort of 2 marks. So every customer that we bring on, whether it's through module uptake or usage uptake, we always see a lot of headroom for growth.
And there's a couple more questions there from the shareholder, if you don't mind answering ones. There's just one here on, do you have an expectation of when you'll be able to go live on your Essentials package?
Yeah, I didn't, just sort of spinning through Essentials. Traditionally, we've sold large enterprise-wide solutions, the platform, and long sales cycle, organizational change. Essentials is all about a packaged up version, which can be taken on by individual projects. So fast turnaround times, lower cost, lower barrier to entry. We're hopeful of sort of getting that out to market in the coming months. It's undergone prototype testing and going through all of that, and we're working out our go-to-market strategy, but incredibly excited about what that can do in terms of fanning the flames of scale and adoption and more green shoots up into those full enterprise adoption.
Thanks, Mike. That's all we have time for. I'd love to follow up with some content and some other ideas. So thanks for your time. Have a nice weekend.
Great. Thanks, Tim.
Next up, we have Control Bionomics, market cap of around $48 million, hasn't been listed for 12 months. The company's aim is to become the world's leading provider of innovative, augmentative communication and control devices for people with speech and movement disabilities. We have with us the CEO, Rob Wong. Rob, over to you. Thank you.
Thanks, Tim. Thanks for the opportunity to present to your cohort of investors today. Really exciting. We are, for people who are viewing, we're a tech company, an Australian-based tech company. We are really passionate about the growing assistive technology market globally, and we think we've got world-class technology, even though at the very early stages of commercialisation. So hopefully I'll take you through some exciting stuff that we're doing and as we move forward. We'll just go through the disclaimer. I thought I would start today, and we'll start the video in a second, but to talk to you, really put our product in context. We serve severely disabled people, and our technology enables those people to be able to communicate when their body, their voice and their body is often not playing ball. And we have the great pleasure of being able to serve people and change their life when they can communicate. And I just received, interestingly, just now a text from a client in the US who just said to me, because of the efforts of Control Bionics, my mum's world is unlocked, and to me that is priceless. And that's the sort of work that we do, and we think as a business we can take our world-class technology to the world. I'd just like to play this video to give you a context of the sort of products we offer.
What I love about my job is working with patients and their families and problem solving with them on the best means of communication. And it was wonderful when Marie and Rebecca approached me with the NeuroNode trilogy saying, hey, we've found this device. Seeing Marie use the NeuroNode trilogy was lovely to see. Her face lit up using it.
When I first met Marie during the assessment, one of the things that I realized is that she was really good at flexing one of her fingers. And at that point, I knew that we could use one of the muscles going through that finger to measure that activity that then she could use as a click on our computer. We moved into the eye gaze technology where we did the eye gaze calibration. She was really good following targets around the screen. And then the beauty comes when we integrate both technologies. So that means that she will use her eyes as the mouse on the computer, and then the NeuroNode as a click, which is gonna give her more accuracy, meaning faster speed, less fatigue when using the system for communication.
Hello there. Perfect. Part of my role is finding a device that is tailored for patients and working with them on what would work best with them in their daily life.
Yeah, the Control Bionics machine has really helped. If we didn't have it, she wouldn't be able to tell us her thoughts. We'd only be guessing.
And just yes or no, pretty much. But like even I'm fairly pregnant as well, so you know she can give me her opinions on what names she likes, what she doesn't like.
And I've got a 1-year-old, first-time mum, been able to obviously help me a lot through text. So yeah, still be able to communicate when I'm not around.
Getting the machine has come at the right time as I could not use my phone. The NeuroNode trilogy has given me a second lease of life, being able to communicate with my family and friends. I'm able to message them through Messenger or text. I can email as well. This is important as I can still express my feelings and what I need. This is vital for my carer as well.
having the customer support for Marie and the family to contact Control Bionics whenever they need, as well as being there to support myself, has been a really great opportunity for both of us.
Great. So that sort of puts our product in context, and I'll explain a little bit more about the detail and the technology as we go through. So if we could go to the next slide, please. So we have this technology which via very minute muscle signals that are sent from the brain, we can pick up on our device, which allows us to be able to send binary signals to a computer to be able to control it. And we combine that with eye gaze technology, and we think the combination of those things creates world-class technology, and we're taking that to the world, and that's why we went to capital raise in December last year. Our goal is to be the global leader in augmentative communications and control devices. So we want to help people within the whole assistive technology market be able to communicate and control things when you would think that there's no way to them to be able to do that. Thank you very much. Next slide, please. And, you know, we work with a whole range of different people of conditions, MND, cerebral palsy, from the very young children to very aged clients. And our technology is all designed to enable people to communicate easily and effectively. And we think we do that better than anyone else in the world right now. Thank you very much. So, when we went to IPO, we had two major products, and the NeuroNode is our own core technology, which enables us to pick up very, very small signals from the body. It's world-class patented technology, and then we brought that into two usable products. One is a NeuroNode only product, which is married with a computer and software, which enables someone to speak purely by sending signals from the NeuroNode. And then we have our faster speed, less fatigue model, which combines our NeuroNode technology with eye gaze technology, where you look at the screen with your eyes and that controls the cursor. But the NeuroNode itself, you just think about wherever the NeuroNode is on your body, and it could be on your frontalis, it could be on your forearm, it could be on your shin. But the secondary message is to use that NeuroNode to make a secondary signal to take action on the screen. And we're having great feedback from the market on the technology that we have. New slide, please. So in December, we had a successful capital raising. We raised $15 million. And that was really on the basis that we felt that our technology was ready to take it to the market globally. And we had very, very good take up from investors in terms of the ability to look at our IPO. Patented technology, significant global growth opportunity in terms of the whole assistive technology market globally. And with aging populations and our market, we think there's incredible growth for this business ahead. So our priorities in getting that IPO together were, we wanted to expand our expansion into the Australian technology sector. We wanted to expand into North America. We already had a small footprint in America, but nothing much in terms of scale. We wanted to expand into relevant international markets, and we see Japan as a very, very important market for the type of product that we have. And we also know that the core technology that we have has ultimate applications in other areas to be in that sort of control and monitoring part of the business. And we wanted to make sure that we could develop that over time. Thank you. Next slide. So already the business is turning over close to $4 million, and we're very proud of that in the last financial year. Over the previous year, we had 28% year-on-year growth, which we were very pleased given, you know, all of the conditions of COVID-19. Our population grouping, every product that we sell has to be assessed by an individual client, and COVID has meant that you just can't get to clients. So to have 28% growth in a very, very young business, it's really focused on product improvement and where we're going, we think's been an excellent result. So Australia and USA have been really good. Obviously, we're well funded in terms of our cash position as at June 30th. And amazingly, just recently, we were a top 10 finalist in the Financial Review's Most Innovative Companies for Health Industries, which we're very proud of. So we think not only have we got a technology, you know, which we think heralds, companies like Cochlear and ResMed in terms of heritage and where we think we want to go. But we've already got revenue and worked through the whole buying model of how this product needs to go to market. So we're very proud of that result. Go to the next slide, please. So the year ahead is one that we're very excited about, because we see the easing restrictions of COVID mean that all the preparation work that we've been doing whilst we've been in this pandemic has not been wasted, and we are being really prepared to take it ahead. Next slide, please. So significant addressable market globally, just in terms of the core 3 markets that we are really focused on right now in terms of scale. We've got an addressable market of 76,000 in Australia. We've got 300,000 in the US, 43,000 people diagnosed every year. And in Japan, 120,000 people with 16,000 people identified in terms of these type of conditions: ALS, spinal cord injuries, multiple sclerosis, and cerebral palsy. So we think there's a magnificent opportunity, and our combination of product compared to the competitive set that is currently in the market globally, we know that our product offers faster speed and less fatigue for users, which is critically important to how much they can use their devices. So we think we've got a winning edge there. Next slide, please. And whilst all this has been going on, we haven't been resting on our laurels in terms of our investment. We see the growth opportunity for Control Bionics to be global. And even though we've had the COVID restrictions on, we've been investing our money in developing a fantastic team to set ourselves up to be a global company from the small company we were prior to IPO. So I'm very proud to say that Peter Ford and James Shorey operate in the company. Peter Ford is our founder and was the amazing inspiration for the NeuroNode technology, and is now actively still in the business, helping us reduce the size of the technology so that when we want to address additional markets, we are ready and prepared with our technology. We've developed a global team of production. We're developing our funding resources in the US, and we're increasing our sales and marketing resources across the globe. So we think as we come out of this COVID environment, it's a really exciting time for us and our brand to be represented as a really respected Australian growth company. Next slide, please. So what are our priorities for the next year? We've spent a lot of time developing the product, so revenue growth now in Australia and North America is important for us as we come out of COVID. Obviously, we've made investments in infrastructure. We want to see those investments start returning. And in product leadership, one of the things that we've done is we've invested in new branding and marketing that we think is of a global standard. And we're also expanding our product range within the assistive technology market to address markets like autism, whilst we were, not able to get out and see clients. We've also introduced a rental model for our product, and we're testing that in the Australian market with the NDIS, and we're having great success from the NDIS in terms of providing options, not just capital purchase models for equipment. Our equipment sells for around $20,000 in context. Introducing a rental model has been very attractive for NDIS, particularly for people where the horizon of use of that capital, is sometimes difficult to judge. And in terms of international markets, opening up Japan is an exciting opportunity for us. 137 million people. A lot of the traditional European competitors in this space don't operate in Japan. And we think there's an amazing opportunity for us to be a market leader in the AAC, or the communication market of the assistive technology in Japan. We've already started expanding our international footprint. We've got set a distributor up in Singapore. And the next thing for us to consider really is our entry into Europe and the UK in terms of where we're going. But, with the team we've got in place now, we've got the capacity to be able to do that and be able to be successful in those markets. In terms of R&D, we've got a very, very strong internal R&D map, and some of that's already come out now, expanded product range that'll be launching through these next 2 quarters. But our neuro wearable technology, we think, can be applied in a variety of different markets as we go forward. And over the next year and a half, you'll start to see some of those other sectors come online as we develop the technology. And we're already doing a project which extends our assistive technology market with Deakin University, where we're looking at how can we take a disabled person and give them the ability to control their wheelchair safely in an environment. And we think that that will give a lot of people a lot of satisfaction in being able to move around their home safely without the intervention of carers. And we think that'll be a great extension product to where we're going. Next slide, please. Just really want to talk about the range. So we've got a whole range of things. When we started the year, we had 2 products. Now we have 4 products. We have our NeuroNode Trilogy, which combines the NeuroNode and eye gaze technology. We have our NeuroNode only product. We have an eye gaze only product. We have a new Touch product, which will mean this is a handheld device, which just uses our software and can be carried around. Plus, we've just introduced our Cosmos Connect product, which is a product which connects into all of these systems, but it allows a single switch user to be able to extend and control things like feeding robots, to be able to eat themselves, to be able to control wheelchair, and also importantly for a lot of people, to be able to do normal things like to be able to plug into an Xbox and play an Xbox game with your brother or your sister. So we think we've got a very well-rounded product. So we've been working very, very hard during the process of the pandemic, and we think we're coming out with some fantastic fresh spring product to extend our control as we go forward. Next product, please. So this is just an extension of the Touch product. It's a handheld product that someone can carry around with them. All of our other products in the range are really designed for people who are severely disabled and probably can't move. This product moves with people. So it is a product that can go to school. It has over 8 hours worth of battery life. It comes with specially designed plastic guards, which help guide a cerebral palsy person to be able to select various things on the software. And we think that this is going to be an exciting product for us in terms of expanding our range in the disability market. Next slide, please. On the innovation front, as I said, we are, Peter's really driving this project about reducing our technology and looking at doing research applications for how our monitoring and controlling technology can be applied in different applications. And we're making very, very good progress in terms of flexible membrane to be able to put our device on. Our device at the moment is something like a 2-inch, 3-inch device. We want to get that down to, very, very small, flexible pathway, and we're just about there with that technology. And as I said, we're also working on a wheelchair control project with Deakin University, which we think will give our existing market additional reasons to buy more things from us in the form of an add-on tool to our system, which will allow you to control things like wheelchair. So next slide, please. So overall, we are very, very excited now. We think that the market is opening up for us. The reaction that we're getting from marketplace now is we are a player in the space, even though we're a pimple yet in terms of global presence. We certainly have a footprint in the US and Australia, and we're very excited, and particularly today as Victoria is out of lockdown. It's very exciting. So thank you very much for the opportunity to talk. We think that we're going to be a very big story into the future, and would certainly have very happy to have investors along the way with us.
Thanks, Rob. Are you in Melbourne? Are you out of lockdown? Does that mean?
I am. I sort of don't know what to do. I've opened the front door, but I'm afraid to go out.
Just get outside, Rob. Now, a couple of questions. I mean, congratulations on such a significant product helping people with severe disabilities. I almost feel like I have to apologise to ask commercial questions, but how do you sell the product? We watched that video, and there's obviously a lot of interaction with the patient, for want of a better word. How do you celebrate? How do you sell that product? Do you kind of use other parties to do that? What's the process?
We have a growing direct sales force in both Australia and the US. And basically what that sales force does is go and do assessments with clients. But we're also now at a stage where the technology is starting to get stable. We understand the buying cycle of how people buy the product in terms of specifying it, assessing it, trialing it, and then applying for funding for the product. But we think that partner sales now are really going to be an important part of what we do going forward. And we've already established one relationship with a significant US-based distributor called New Motion, and they are helping us in the northeast of the United States in terms of extending our ability to reach customers. So at the moment, in terms of small stage, it's direct sales force in the key markets, but we see the future being distributor-based relationships.
And how does the patient, for want of a better word, how do they fund the product? Is the NDIS open? Is insurance open?
Yeah, so NDIS is open in Australia. Our product, $21,000, is fully funded, and the rental product is also fully funded. So that's exciting. In the United States, we fund the product. Primary insurance will pay about 80% of the product, and then there's co-funding for the product. But that's another thing about the business and the team that we've amassed, is that we are very focused on serving the ultimate payer, which is the insurance company, and how to deal with that. So we have access to Medicare in the States. We have 35 states in Medicaid, and we also deal with the VA directly in the States. So we're starting to really have a presence, and the market is actually starting to say, okay, you guys have been around a little bit, and now we get it that you're going to be here for the long term. So we're starting to get to that early stage of who are you, what do you do, to starting to become, okay, we get what you do, and we understand that your product really does work.
I mean, it's early stage to the ASX, but how long have you been building these networks and pathways into the States with Medicaid and et cetera?
I started with the company in January 2017, and we had 4 people in the company. And that was it. And Peter Ford, the founder, and James Shorey, our Chief Technology Officer, had been developing the technology as an R&D exercise really for the previous number of years with that. And it was really at that point when the investors made a decision and said, you know what, we actually have something here that is amazing and we need to start investing in it. And I was invited to be a consultant to have a look at the business and see what the market potential was. And I presented to the board back in late 2016. And Peter Ford asked me, he said, Rob, would you like to implement the plan? And it was an overnight discussion with my wife to say, you know what, this business is amazing, the technology is amazing, and we can do so much good for what we're doing. And I think we're going to be an Australian success story as we grow.
Congratulations, Rob. Let's leave it there. There's a couple more questions here, if you don't mind answering those online at some stage. Sure. Thanks for your time. Enjoy your lockdown freedom, and we'll have you on again.
All right. Thanks, Tim. Cheers.
That's all we have time for, everyone. I think everyone's out of lockdown now. Enjoy your weekends. See you next week.